Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemang Jani is still with us, helping us figure out our strategy so we can make money in this stock market, and it certainly looks like a market to make money in. Our focus right now is on RIL. We have a question from Neha, who has 10 shares of RIL which she bought at 950 rupees, and she wants to know if she should hold on to that stock. I'm going to pull up RIL for you. It ended the week at 895. Now, the reason why we're focusing on RIL this week is that it surged on Friday after the cabinet allowed it to almost double the price of natural gas from the 21st of April next year. Let me bring in my colleague Ajay to tell us what the latest developments mean for RIL and for its stock and its business. Ajay.
On Friday, Reliance Industries stock surged at a multi-month high, almost 5% gains coming in on the back of a company of that size. More to do with the cabinet nod which came in this time round. That they will be allowed to hike prices for gas April 2014 onwards. A gas price hike will not have any cap, and even spot prices would be included, which means that this particular gas price would be a floating rate. This was the biggest overhang on Reliance Industries for past several months. There was a political logjam between the company and the government, and traders and analysts on the street believe that this has opened up a whole new territory for the stock and the business to go, because past couple of quarters the refining and petchem side of the business were doing well, but the gas volumes had shrunk to low single digits of 8 units per day, and hence this particular segment was almost not performing. Going forward at 900 rupees a share, the trade analysts say that the E&P side of the business or the gas side of the business almost comes free, and any upside and improvement in gas volumes, which is expected now that the prices have been market linked, will only add to the target price of Reliance Industries. So after a 6-year span of underperformance, it's likely that this particular stock will continue to support the market going forward.
All right, Ajay, thank you for those details. Hemang, let's talk about RIL. You mentioned it a little while ago before we went into break. You said it's a good buy at these levels. Are you expecting it to run up on Monday morning? That's my first question for you.
Well, it may give some more upside on Monday because it is already shot up by almost about 40 to 50 rupees in the last couple of days. But fundamentally speaking, we think that this gas price hike itself could give them an upside of about 5 to 7 rupees on the earnings. And the production can also scale up, over the next couple of years, and that would be a double, advantage for Reliance's earnings. So we think that yes, from a 1 or 2 year perspective, it looks like a great buy.
So if we buy it, at what level would you like us to buy RIL right now?
One can buy at current levels. One can buy maybe in 2 or 3 parts. If there is any volatility going forward, one can definitely look at adding more.
Now, we've asked Hemang to bring in 2 more recommendations for the new year for long-term investors. The first of his 2 recommendations is Bajaj Auto. Hemang, take us through why Bajaj Auto is on your list right now, and of the various two-wheeler stocks, why Bajaj Auto and not the others.
See, first of all, amongst the entire auto pack, in the OEM segment, Bajaj Auto has the highest operating profit margin of about 20%. Number 2, in the higher margin segment, the market share that they have is much higher than the rest of the competitors. Thirdly, they have a fair amount of export in their business, so the currency works to their advantage also. And we think that with newer segments like 3-wheelers and quarter cycles, I think there could be some more growth drivers in place. So, and overall rural segment, we've seen the demand really remaining pretty strong, and they have a good amount of network on the rural side of it. So we think that from all these angles, Bajaj Auto looks like a great buy. It can give about 15 to 20% upside from current levels.
All right, so Bajaj Auto was that first recommendation. Second on your list is Kanhaiya Healthcare. Tell us why it makes your list.
See, this has a very strong global business through generic opportunities, and they have very aggressive plans of filing the ANDAs. And also in the domestic side, they have their own niche products which are doing extremely well. They are high margin products. So at current valuations of about 13 to 14 times, we think it's a compelling buy, and it's a defensive play. So even if the market remains volatile, we don't see much of a negative impact on this stock.
So both Bajaj Auto and Kanhaiya, if we were to add it to our portfolios, would you like to give us a limit to which we should keep these stocks in our portfolio? Is it 5%, 6%? At what level would you like us to stop?
See, if you have a portfolio of about 12 to 18 stocks, the per stock limit could be anywhere from 5 to 10% depending upon how much exposure you want to take in a particular stock. So since both of them are large cap stocks, I would be comfortable, putting a limit of about 7 to 10%.
It's time for us to take a very quick break. When we come back, we're going to discuss stocks like Dena Bank, Allahabad Bank and SKS Microfinance. Don't go anywhere.